Hello and welcome 11 commerce students out there. Today I will explain to you some more transactions which are very important from where we can identify the accounts, and after identification of the accounts we will find out which one is to be debited and which one is to be credited following the double entry system. So please see the two transactions that I have written. The first one is cash withdrawn from bank for personal use, for office use. Cash withdrawn from bank for office use, and the second one is cash withdrawn for personal use, cash withdrawn for personal use. See the difference of the two transactions. First one is cash withdrawn from bank for office use, and the second one is cash withdrawn for personal use. Here the transaction is office use and here it is personal use. So please clearly see the difference. So first we will talk about the first transaction. Cash withdrawn from bank for personal use. Here the two accounts involved is cash and bank. Cash and bank. If you clearly remember my last class, if you have clearly followed the last class, there I have taught you one transaction, that is cash deposited into bank. Cash deposited into bank. In that transaction, bank asset was increasing. So bank was debited and cash in the hands was decreasing. That's why cash was credited. So bank, it was debited, and cash, it was credited because bank was increasing. Bank asset was increasing. The cash in the bank was increasing. That's why bank account debit and cash account was credit. Cash deposited in the bank. It was for cash deposited in the bank. But this transaction is just the reverse transaction. Cash withdrawn from the bank. Cash is being withdrawn from the bank. So just the reverse thing will happen. The bank asset is decreasing and the cash in hand is increasing. Bank asset is decreasing. Personal account. Bank is a personal account. It is decreasing. It is going out. So debit the receiver, credit the giver. Here bank is giving the money. That's why bank will be credit according to the golden rule of personal account. According to the golden rule of personal account, bank is giving out money. So asset is decreasing. Credit the giver. That's why bank is credit. Whereas cash in the hand is increasing. Cash is coming in. For any time, if cash is increasing in your hand for sales, for any other income, if cash is increasing in your hand, cash will definitely be debited because cash is a real account, and following the golden rules of the real account, cash will increase. That's why what comes in, according to the real account, what comes in debit. That's why cash is coming in. It is a real account and it will be debit. It will be debit and bank will be credit. These are the clear identification of debit and credit of the two accounts involved in this transaction. Coming to the second transaction. That is cash withdrawn for personal use. For personal use, cash is withdrawn. So what will be the two accounts involved in this transaction? Cash withdrawn for personal use. Cash is withdrawn, so cash will be there, and drawings. These are the two accounts involved in this transaction. See, drawings and cash. Cash is withdrawn for personal use. These are the two accounts involved in this transaction. Now here, these drawings will be debit as we are giving out money. We are extracting money. That's why drawings, it is a personal account. Personal account rule is debit the receiver, credit the giver. So as drawings we are receiving money, it will be debit. And cash is going out for personal use. So cash will be credit. It is real account. What goes out, it will be credit. It will be credit. Following the real account rule, cash will be credit as cash is going out because of some expense. So cash will be credit. These are the two clear distinction. Some more things regarding the transaction I want to tell you. That is, here I have clearly shown you that if any expenses or income is made in cash, we are showing the two accounts involved and one of them is cash. If any cash transaction is there, we are showing one account and the other one is cash. We are showing two accounts for any cash transaction, out of which one is cash. But if cash is not there, if cash is not mentioned there, which means that if any transaction is given to you related to check, that means transaction takes place with the help of not cash but check, then in case of cash, in place of cash, we will replace the cash with bank. We use the term bank for any check transaction. We don't use check. For example, wages paid by check, salaries paid by check. If I give you one example, how to use if any bank transaction or transaction takes place through check, what are the two accounts that will be affected? Suppose salaries paid by check or machinery purchased for check or rent paid, electricity paid by check or commission received by check, commission received by check. All the transaction, please note, all the transactions takes place not through cash but through check. Here involvement of check is there in each transaction. Please note carefully, no cash transaction takes place. Here the transaction takes place through check. All are check transaction. It takes place through check, not through cash. So here the two accounts involved, among the two accounts involvement, one will be bank. We use the account bank in place of check. For example, first one, salary paid by check. The two accounts involved will be salary. In case of cash, we used to use salary and cash. Salary and cash were the two accounts involved in cash transaction. But here we will use salary and bank. Salary and bank. For check, we will use, for check transaction where cash is not used, where there we will use bank. Is it clear to you? I hope it is clear to you. Salary account being nominal, because salary is an expense, nominal, so it will be debited. It is a nominal account. Expense, all expenses are debit. That's why salary will be debited, because we generally give out salary. It is cash is going out. That's why here not cash but check is going out. That's why check will be treated as credit. So bank we will write and bank will be credit. Credit the giver, bank is a personal account. Credit the giver, so it will be credit. Salary will be debit, bank will be credit. Why bank? Why not cash? Because here payment is made through check and not through cash. That's why whenever a check transaction will be given, you have to use the term bank. Salary debit, bank credit. Here commission received by check, it is an income. Commission is an income. So the two account involved will be not cash but commission and cash. Commission and bank. In place of cash we will use bank. Why? Because it is a check transaction. Now commission is an income. All income are treated as credit. All expenses are debit. It is a nominal account and according to nominal account all expenses are debit. So commission is an income. Commission is received. Whatever we are receiving, that will be treated as an income. That's why commission is an income. All incomes are credited as per nominal account. And bank, it is because we are having an income personal account here personal account. We are getting the cash, we are getting it. That's why this will be debited. Debit the giver. Debit the giver. Here personal account, debit the giver. We are giving out the check. No, we are receiving the check. We are receiving the check. That's why it will be debit. Debit the giver, credit the receiver. So here we are receiving the money. It will be debit. Bank asset is increasing. Bank asset is increasing. That's why it is a debit. It is increasing. Bank asset is increasing. Here we are receiving. We are receiving money. That's why this will be debit. And this will be credit as this is income. In case of machinery purchase also, machinery will be debit. The two accounts involved will be machinery and bank. Not cash. Machinery and bank. Machinery will be debit. Asset is increasing. That's why according to real account, what comes in? Machinery is coming in. That's why it is debit. It is real account. And bank, this will be credit. Because cash is going out through check, that's why it will be credit. Now rent paid also, rent will be debit. It is an expense. It will be debit. Nominal account, it will be debit. And bank will be credit. Bank is the giver. Credit the giver, that's why it will be treated as credit. Personal account. Here also personal account. Credit the giver. That's why we are purchasing machinery and giving out cash. That's why this is what all the transaction is. We can understand through the transaction, the identification of the accounts and debit and credit application. Which one will be debit and which one will be credit. These are all about the transaction. I hope you have understood whatever I have explained through this transaction. So you will not face any kind of problem while following the class. So follow the class regularly. Follow it more than one time if you require more and more times, and apply it while doing the transaction. So I will provide with you some more transactions from where, with reason, with logic, which one will be what account and what rules will be applied for each of the accounts. So from there you can easily try out the different transaction and find out the different accounts involved in the transactions, and do it as a homework and submit your copies regularly. Download the PDF where I will provide the transaction with the identification of accounts and the debit and credit with proper logic. Follow the classes and download the PDF so that you can understand how it works, how you can find out the different accounts from the transactions. Follow these transactions regularly, because very soon I am going to start with a new chapter called journal, where more and more transactions will be given to you, and you have to find out the debit and credit items from those transactions, keeping in mind what are the accounts that are affected. So till then, practice hard. Goodbye.